What happened in the world of cryptocurrency this week? Pull up a chair and buckle in for the roller coaster ride that is Bitcoin. This week we witnessed a wild ride, with Bitcoin taking a plunge of over 10%, dipping below $43,000. And what marks this event as particularly noteworthy? Well, it happened on the very same day El Salvador officially adopted Bitcoin as legal tender. Now, this move was met with a chorus of apprehension and criticism. Concerns were raised about the stability of the country's currency amidst this bold, digital revolution. Critics argued that such a move could potentially destabilize the country's economy and pose significant challenges for the average Salvadoran. But amidst these criticisms, the Bitcoin market saw some startling fluctuations. The price of Bitcoin soared to nearly $53,000 before taking a nosedive, dropping to a 24-hour low. It was as if Bitcoin was on a wild, uncontrolled ride with its value swinging from one extreme to the other. And yet, despite these dramatic ebbs and flows, there was one person who remained unflinchingly confident in the face of Bitcoin's volatility. Salvadoran President Nayib Bukele appeared undeterred by the market's turmoil. Instead of retreating, he boldly declared that he was buying the dip. This statement served as a testament to his unwavering belief in the potential of Bitcoin, even in the face of its unpredictable nature. Despite the turmoil, Salvadoran President Nayib Bukele remained confident in the cryptocurrency, stating he was buying the dip. And that, dear listeners, is the roller coaster ride of Bitcoin this week. When Bitcoin sneezes, does the entire crypto market catch a cold? A question that's been on many minds, especially after the recent roller coaster ride Bitcoin took us on. El Salvador's adoption of Bitcoin as legal tender was seen as a significant step towards mainstreaming cryptocurrencies. But what was the impact on the wider crypto market? Let's talk about the sell-off phenomenon that shook the cryptosphere. You see, when El Salvador officially adopted Bitcoin, the price of the currency dropped over 10% below $43,000. Yes, you heard that right. It was a clear case of the market reacting to the buy the rumor, sell the news phenomenon. Despite the positive outlook on the adoption, the market responded with a significant sell-off. Now you might be wondering, why would the market sell off? Well, it's simple. Cryptocurrency, by its very nature, is volatile. It's an asset class that's driven by speculation and investor sentiment. And when a country like El Salvador adopts Bitcoin as legal tender, it's bound to spark some fears. Concerns were raised about the country's currency stability, and these fears potentially contributed to the sell-off. But what does this mean for the broader crypto market? Well, it's a ripple effect. Bitcoin, being the largest and most influential cryptocurrency, has a significant impact on other cryptocurrencies. When Bitcoin's price fluctuates, it can cause a domino effect on the prices of other cryptocurrencies. This is because many cryptocurrencies are pegged to Bitcoin, and when Bitcoin's value drops, it can trigger a market-wide sell-off. And that's exactly what happened. The market remained volatile, with Bitcoin trading down about 9.5% mid-afternoon. This volatility was felt across the crypto market, causing a ripple effect that impacted other currencies. So what's the takeaway here? It's clear that Bitcoin's movements have a significant impact on the wider crypto market. When Bitcoin experiences volatility, it can cause a cascade of effects that impact the prices and stability of other cryptocurrencies. But remember, in the world of crypto, volatility is part of the game, and as the saying goes, if you can't stand the heat, get out of the kitchen. Or in this case, the crypto market. Ever heard of the phrase, buy the rumor, sell the news? Let's unpack that. This adage is not exclusive to the cryptocurrency market, but it does play a significant role in the volatile price movements we often witness. It essentially captures the tendency of traders to react to rumors and speculations about an event, and then sell off their assets once the event actually occurs, or the news becomes public. Take El Salvador's adoption of Bitcoin as legal tender, for instance. Before the official announcement, there was a lot of buzz and speculation about this groundbreaking move. Many investors jumped onto the Bitcoin bandwagon, hoping to ride the wave of positive sentiment and potential price surge. This is the buy the rumor part of the phrase. However, once the news broke out, a different behavior kicked in. Despite the adoption being seen as a positive step towards mainstreaming Bitcoin, the market reacted with a significant sell-off. Why, you might ask? Well, it's because the information was no longer a speculative piece of news, it was a reality. And in the reality of trading, every piece of news, good or bad, presents an opportunity to cash in on the investments. That's the sell the news part. What's fascinating about this phenomenon is how it reflects the psychology of the market. Traders and investors are constantly trying to stay one step ahead, buying into the potential of a rumor and selling when that potential becomes a reality. This constant speculation and adjustment of behavior based on rumors and news can lead to dramatic price swings, as we saw with Bitcoin in the context of El Salvador's adoption. So, the market's reaction to El Salvador's Bitcoin adoption was a classic case of buy the rumor, sell the news. It's a reminder that in the world of cryptocurrency, just like in other markets, news and rumors can be just as powerful as the underlying asset itself. El Salvador took a bold step into the future this week. In an unprecedented move, this Central American country embraced the possibilities of the digital age, becoming the first in the world to adopt Bitcoin as legal tender. This decision, however, wasn't taken lightly. The Salvadoran government carefully considered the potential risks and benefits before venturing into this new territory. In a determined effort to support the move, the government purchased additional Bitcoins, a clear demonstration of faith in the cryptocurrency's potential. But they didn't stop there. The Salvadoran government also introduced incentives to encourage its citizens to use crypto payments. This move is seen as a significant step towards integrating cryptocurrency into everyday life, making El Salvador a pioneer in this field. However, the adoption of Bitcoin was not without its challenges. On the very day that Bitcoin was officially adopted, its value plunged by over 10%, falling below $43,000. Despite this volatility, Salvadoran President Nayib Bukele remained confident, stating he was buying the dip. This bold move by El Salvador has sparked a global conversation. It's a fascinating experiment that could potentially pave the way for other countries to follow suit. But, as with any new venture, there are risks involved. Concerns have been raised about the stability of the country's currency, particularly given the notorious volatility of Bitcoin. Yet despite the turbulence, El Salvador's decision to adopt Bitcoin stands as a testament to the country's readiness to embrace change and innovation. It's a daring leap into the unknown, a plunge into the digital future that reflects the country's resilience and adaptability. El Salvador's adoption of Bitcoin is a historical step, but the road ahead is still uncertain. As the world watches, only time will tell if this bold move will prove to be a masterstroke or a misstep. But one thing is for sure. El Salvador has firmly placed itself on the map in the world of cryptocurrency. As we approach the Bitcoin halving, what should we expect? It's the question on the lips of every keen observer of the crypto space, and rightly so given the historical significance of these events. The concept of Bitcoin halving, for those who are not in the loop, is an event where the reward for mining new blocks is halved, meaning miners receive 50% fewer Bitcoins for verifying transactions. This event takes place every 4 years, and it's more than just a protocol. It's a spectacle that has ripple effects across the entire market. Historically, Bitcoin halving has been a catalyst for change, often leading to a surge in the price of Bitcoin. It's a supply-demand equation. As the reward for mining decreases, the supply of new Bitcoins entering the market slows down. If the demand remains strong, this reduction in supply can trigger a price increase. But the question is, will history repeat itself? Well, as we've seen with El Salvador's adoption of Bitcoin and the subsequent market reaction, the world of cryptocurrency is a roller coaster ride. Predicting the exact outcome is like trying to predict the path of a feather in a hurricane. What we do know, however, is that the Bitcoin halving event is a marker in the sand. It's a reminder of the revolutionary technology that is Bitcoin, a currency designed to be finite, a stark contrast to traditional fiat currencies that can be printed at will. This inbuilt scarcity is one of the key factors that gives Bitcoin its value. One thing is certain, as we approach the Bitcoin halving, the eyes of the world will be watching. It's a moment that encapsulates the drama, the uncertainty, and the potential of the cryptocurrency world. So, as we brace for the Bitcoin halving, it's clear that the world of cryptocurrency is anything but predictable. But isn't that what makes it so intriguing?